Hey everybody, my name is Chumbaroony. I'm here to show you my EMA strategy. It's a pretty objective one, it's just a continuation strategy, looking to capitalize on trends and follow along with them. This one kind of waits for confirmation though, and uses pretty decent sized targets. In this case, we're going to look at NQ on the 1 minute time frame, which is where I do most of my trading with this strategy, though I do also use it on ES futures. Anyways, here we are. We got the NQ chart here. Like I said, it's just EMAs. All I use is two. This purple one is going to be 150. This red one is just 50. Uh, when the 50 is below the 150, that means it's a downtrend. I'm looking for shorts. So I want the price, to be in a good solid downtrend or whatever, or at least a notable one, and below my fast EMA. And then I want it to retrace just like it does here, all the way back up and close above my slow EMA. So I want it closing above this purple line. As soon as this guy here closes above my purple line, then that means I'm ready to start looking for shorts. As long as this fast EMA stays below the slow EMA, and then after this candle close back above my slow EMA, I look for a candle to come back down and close below the fast EMA. And I want it closing. I'm not talking about wicks. When I say close, I want a candle closing and up there and then moving on. Its closing price needs to be above or below, whatever I'm saying. So in this case, I want it downtrend, price retracement, candle closing above, and then these staying on the right sides, and then this candle closing back below my fast EMA. And once that candle closes, I know I can go short. If I can get in better than this exact spot where that candle closes, great. If not, the strategy's been designed to take it at that spot. So I know it works if you just take it at that spot. 35 points is my targets. For NQ, 35 points, 140 ticks. That's my initial target. That's my scalp out. That's when I'm taking profits on most of my position. 35 points. That's the magic number. My secondary position, my secondary targets, 100 points. But my stop's up at break even once I hit 35. So, um, so this is stopping back out at break even. And then here you see we crossed, we're bullish after that. And then we come back down. So we're bullish, price is going up. I want it to come back down, close below my slow EMA. Perfect. Now I'm looking for something to close back above my fast EMA. As long as my fast EMA is still below my slow EMA. Great. We see that happening here. So we're long there. Like I said, initial target, 35 points, my magic NQ number, that hits. So then secondary target, 100 points, which hits more than you think it probably does. Boom. You got a really successful trade. You can probably just walk away after those two trades, to be honest. But if we're still here and we're still greedy, we can keep going and we see we have another setup a little bit later in the day. Coming back, we're in a bullish uptrend still because we got the fast EMA above the slow EMA. Price is retracing back below, closes below, perfect. Fast EMA is still above the slow EMA. When this candle closes back above the fast EMA, so that's when we enter long again. We got our 35-point target. That hits. Um, Secondary target, goes to 100 points. You can see that doesn't hit. And since we don't want to go holding this past the closing bell, what I do is if the candle is not like what happened here, where it hits the initial target and then immediately with takes like one candle to retrace all the way back to your break even. If you have a little bit more steady price action like this is happening, but you see it's kind of fizzling out and slowly going away, you can close, or I like to close my position once a candle breaks back below this fast EMA. So a candle breaks below, closes below, I'm out. And that's my EMA strategy basically. Like I said, I use this on both NQ and ES. Let's take a look at ES right here. As you can see, I was already doing a little bit of action with it. See the downtrend developing here. The retrace back up here, closing above the slow EMA here. And then we wait for the candle to close back below the fast EMA here. And that, as you can see, a day like yesterday, that would just be fantastic. But as you can see, for ES, a little bit less volatile of an instrument, I use a little bit smaller EMAs. I highly recommend not just using what I have here and going and back testing um, things yourself before you start diving in and risking any money. Because I am not a financial advisor. I am not a trade consultant. I am simply a guy who trades and is sharing a method of which I personally trade. If you like it, use it. If not, great. If you have questions, give me some comments or whatever down below, and I'll do my best to answer 'em. Hope this helps somebody. Thanks.